Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday, September 12th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Thick on today's show. Of course, the biggest story of the day will be the Apple event later on today, so we're going to talk about that. We got a really bullish note this morning from Morgan Stanley. I know the highest price target on the street, so we're going to discuss that. We've got other news, Tesla moving, Equifax still moving. We got some biotechs in the news as well, and two guests to get to this morning. Our first one will be on at 8:15. That's Alfonso. Esparza, he's a senior market analyst at OANDA. He's a Forex guy. And then at 8:35, we're going to be joined by Nick Chahine, as we are every Tuesday at this time. Joel, what's up in the markets?
Oh, the SPOOs are continuing their move from yesterday, basis to December contract. We had an all-time closing high at 85.75. That's two ticks off your overnight low of 85.25. So no downside at all until that level is taken out. On the upside, there's nothing in here, folks. We're at all-time highs, maybe a target of 2,500 today. Who thought we would have made it up to that level? Crude up 21 cents. Crude just does not want to move out of this trading range. Let's take a look at it. Bases the daily charts, and it just can't get over 50 and can't get under 45. That's been the trading range for quite some time. Gold and silver continue to weaken. Gold in the red by $4 at $13.3180, and silver under $18 at $17.88.5. Saw from JC Peretz via his Twitter account, the commercials are really heavily loaded gold. On the short side, last time that happened, it tanked. So keep an eye on the gold markets. Dennis, how you doing on this Tuesday morning?
Looking at a little rally here. S&P's not surprising. New all-time highs again yesterday. They might be calling it the worst storm or one of the worst storms ever, but market doesn't care. How do you badger market makes new all-time highs?
Yeah,
buy stocks. Bullish for stocks. Florida's flooded. Buy stocks.
Hurricanes. That's right. I mean, we
love hurricanes. We have to rebuild. It spurs the economy.
Yep. And,
come on. Everything is bullish for stocks. Is there anything that is bearish for stocks?
Spencer, what's
nuclear war is going to be bullish for stocks. If we get some country blown up, we have to rebuild it. That'll that'll get the economy going. Everything is good for stocks. Party in the streets.
Well, we haven't had a major disease outbreak in a while, so
that's bullish for stocks too.
Yeah, because then pharma companies will find a cure. Yeah,
they try to cure, help the drug stocks, help the hospital stocks.
Exactly.
Everything bullish for stocks. Celebrate good times. Come on.
All right, let's start out with something that's not so bullish. I want to make sure we catch it. Someone's asking about Equifax here, and certainly not bullish news.
Account compromise, bullish for stocks.
It's not
cybersecurity stocks. Yay!
That's right.
There's a theme here, guys.
Breaches, right? I gotcha. Equifax, Dennis, follow through on that down move here, and someone came out to defend it. Is that the stock we were talking about yesterday? One of the brokerage firms came out.
EFX was coming out defending this. Do you have this note from yesterday? Because Evercore, I think it was Evercore, and I just saw it go by my stream yesterday, so I don't have it in front of me now. But can you hunt that down from yesterday? Evercore was coming out. Spencer, I was asking you. Evercore came out, I believe, yesterday, and they said, buy the stock aggressively. Yeah. Well, if you're buying it aggressively, it went from 120 yesterday down to 113. Now it's down another 2 points. More news. Spencer, what do you got?
The analyst who came out defensive was, before this happened, already like the most bullish analyst on the street when it came to Equifax. He had a $175 price target. So he was already very bullish before this happened. So he's just kind of defending his long-term bull thesis. Right. Let me see if I can grab some comments. Give me a second.
This was yesterday.
Yeah, this is yesterday. This is yesterday at like 10:30.
10:30. Where was the stock at 10:30?
10:50, really.
10.50, the stock's around $124. So right now he's already put you down 10% in one day. Yay!
Not all.
Yeah, I don't know. That's a problem here. Okay, So before we get to the overnight news and EFX, give us the overnight news. Let me and Joel break this down, but give us the overnight news. EFX, it's hitting it again. There was some Supreme Court or somebody's looking for information now. What's going on?
The U.S. Senate Finance Committee has sent a letter to the Equifax CEO demanding information. So,
all right. So they want more information. Yeah, here. Not surprising. Anyways, another headline, another $1.50 down here. It is so difficult to just come in and catch the falling knife. And I do it. Everybody does it from time to time. Usually when I do it, I lose money. The most recent time I was doing it, I threw Spirit Airlines in my investment account because I was like, it's just getting too cheap. I like to save money. I felt like I was saving on the stock, so I put save in my investment portfolio. And obviously save was not a good buy at $39. It's now at 34. Shame on me trying to catch the falling knife, be a hero, call the bottom. Don't do it. Anyways, EFX is the same thing here. It's still falling. Got to let the news continue to digest here. Let the dust settle. Let a bottom, wait for a double bottom or something. But just coming in here and saying, 111.50 is going to be the low. I'm going to come in here. You might get lucky, 1% of the time. The other 99% of the time you're going to get hurt. So I think you need to have some technical setup, Joel, something before you come in here. Do you have anything you're like a number on your radar?
$100 maybe?
I honestly, I was thinking the exact same thing, and not saying when we're going to do that. Just saying, you just came from 145 to 111. When these stocks start getting in like the 107, 108, 100 almost becomes a magnet. So you start coming in here anywhere before 100. I think you could get a shot at 100 on this too. So, that's another 10% down from here. Now, I'm not saying coming in here short the thing today, but I'm saying if you're looking at this, you can't help yourself. You want to put this in your investment account. You want to put this in your long-term portfolio. You might be right 10 years from now, but I think you get a shot at getting this cheaper yet.
Pre-market low, I'll just give you that. We just hit 111.34. I noticed on the dailies, another low at 110.87. That's going back a ways. So 110, 111. I mean, better area to cover short than initiate a long. And, once again, you can look for a red dog reversal, some kind of stability pattern. I mean, right now, too, you have to think about this from a fundamental standpoint. All this news, everything that just happened, it's just not going to get cleared up tomorrow or the next day. Now they're sending information to the government. It's just, there's better places to put your money here. As far as trading it from the short side, you get caught in an analyst, defending it like that. Always use stops. But as of right now, where do you step in to buy before 100? I see a couple weekly lows at 105, but I think the people that are buying at these levels are trying to cover shorts.
Speaking of 100, we're just going to take you. Intercept Pharmaceuticals, ICPT, just started tanking right now.
ICPT,
30 seconds ago here. News desk, is there something on this? Is this just one time? $100. Just trade $100, 117, 100 even, just took it out. Down 11% right now. This is 1 minute ago. It was 112 1 minute ago. It's down 11%. ICPT, something just broke.
I'm looking.
All right.
Intercept Pharmaceuticals, Benzinga News Desk is hunting. Yelled at Brentster. He knows. Yeah. Brentster always got the news there. He's watching those headlines coming out. Maybe some trial. Something's happened here. ICPT. Just trade $100 even. The light volume though. So that thing is 100 offer. 100 offer, Joel. There's 199.5 just went. We're quoting this thing as it goes live.
All right, Dennis, step in there and buy it.
No. They just get the top.
I know.
We don't even know what the news is. I'm definitely not coming here, but I don't even know what the news is yet. So, anyways, ICPT getting crushed here right now as we speak. Brentster is hunting down the headline for us.
Remember when this stock, I think this might be the most ridiculous move. Have you seen this move from 75 to 497? Remember when it did that? This is showing it on the monthlies. I think it did it. Brent, was it like 2 days or 3 days or something? They had some kind of kidney drug and they went all the way to nearly $500. And now it's just been a peg ever since. So I don't know. 100's been big support. Let's find out the news and see if it can get above that. But nice call there. Dennis, how did you have that? They're popping a filter or?
Yeah, I got a scanner going. So I have multiple scanners going. I've got scanners looking for stocks that are up, stocks that are down, fairly significantly here. And then I have a scanner that's looking for action. And when you see 3 ticks in a row in the same direction, like boom, 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 it'll pop in there. Intercept just like, there was multiple. $94 just traded.
Print. Oh,
$94.94 just traded here. This getting absolutely crushed. Joanne Smith is saying, oh, he's got an analyst, but I don't think that's the news.
Yeah, there's got to be.
This has got to be drug information. I got to go hunting here.
Yeah, I'm surprised. I'm actually not finding anything. So everyone in the chat, Dennis.
Everybody's saying there's nothing on Twitter here.
Yeah,
there's news. Something doesn't fall 14% for fun here. We are going hunting here too. I'm going hunting in my news sources as well. We're going to hunt this down here for you in 1 second here. Joel, give us some technical levels here. ICPT, why we hunt.
Well, 100 was support basis the monthlies here. You could see 100, 100, 100. And then I guess you get back to where all this started, and this was back at the $50 area when you had the run up. The stock was under 50, but really in this kind of situation, if you're long, I don't know what to tell you. If you're short, I would just throw out bids at half and whole numbers, and the lower you go, the bigger you make the bids if you're trying to cover a position. But $95, it's not even halted yet either, right? With the news, but
I'm not seeing the news.
Johan Smith in the chat. There we go, Johan.
He says it's bullish commentary.
Results from a control trial. Let's see. Let's read through this whole thing very quickly. Met its primary objective. So yeah, that's good news. Most of the effect was observed 4 weeks. Yada yada.
Is this from like 2 minutes ago, Johan? Is this
I don't know.
This commentary from this BMO analyst?
Yeah,
I'm still not seeing the news. It's down 16% here right now. I've looked multiple sources here now. I'm not seeing the headline here. Did they say something on CNBC?
Was it a fat finger? No, CNBC. You know what? They're still talking about the floods. I mean, that's old news.
I am not seeing the news on this. This is down 16%. I don't know. Maybe it is a fat finger. It's offered at 101 right now. 90. This can't be. It's got to be news. I'm going looking. We got to keep looking. There's going to be something out here somewhere. But I agree. I've looked 5 different places here now, like sources that would have this information. I don't see it yet here either.
All right. That's we got a guest coming on at 8:15. Can we talk about one?
Go to SAGE. There's your other disaster of the day, which before Intercept just came in, SAGE. We do have the news on this one, and this was a trial.
Yep. So they did not meet the primary endpoint for their phase 3 trial of brexanolone. Is I don't know what it does. I just know they didn't meet the primary endpoint.
Hanging in here.
SAG getting crushed.
Yeah, it is. But someone likes it here at 65. I don't know if that's going to hold up for very long, but double bottom basis to 15-minute charts at 65. One pop to 70, and then sellers capped it at 68. Below 65, let's see if that lines up with anything. Nope, below 65. Your March 2017 low was at 61.01 there for Sage Therapeutics. So, Dennis, you were talking, you're bullish the IBB. Are you just going to, I mean, these stocks are not a big part of it, but certainly going to be weighing on the biotech sector.
Yeah, well, there's 2 major components here. So Biotech, this is not good, and with ICPT down, offered at $100 in Sage, so that's going to weigh on a little bit here. But you know what? The Biotech chart itself, the IBB, is still setting up well. Got a little flag there. I was looking at Bluebird Bio. It's got a little flag there. I was looking at Juno. It's got a little flag there. These stocks charts are actually setting up to look pretty good here. I mean, Juno here is consolidated between 40 and 44 for the better part of a week and a half. A lot of times what you see is a big move up and then a consolidation period where it creates a flag. And then if you eventually take out the high of the move, and you usually as a trader, you want to wait until you take out that high of the move, then usually it's going to continue that move higher. And you can sometimes just, a technical analyst like to look at the initial move, say, okay, we had a 14-point move up, we consolidated for a period. Now we're going to have another 14-point move up. I don't know if that's going to happen, but both of these stocks, Juno and Bluebird, set up well with these flags if they can take out the highs of the previous move.
Yeah, the IBB, I mean, you could just see all those highs. Someone's making a major stand here. The last 1, 2, 3, 4, 5, 6, 7 highs have been in the 336 handle. Dennis, I'm thinking of making a 345 versus 335 bet on you on this one, but I know you're waiting for the formation to play out. You don't want to jump the gun, but man, a lot of resistance there. 8:15, Spencer, you got a guess for us?
Quick break, and we're going to grab Alfonso Esparza. He's a Forex analyst. Going to talk us through some recent rate hike stuff we got from Bank of Canada, and the Forex trade. We'll be right back with Alfonso Esparza in a moment. Welcome back, everyone, to Benzinga's Pre-Market Prep. We're on the line with Alfonso Esparza, Senior Market Analyst at OANDA. Alfonso, how's it going today?
Good. Happy to be here.
So we had I guess I'll ask you, a surprise rate hike last week, Bank of Canada. What does that do for you in terms of a broad economic picture?
Well, one of the things that the market was a bit taken aback, it was that it was too sudden. Like last time, the central bank turned very hawkish in June with some comments in some radio station and local radio station. But that basically said, okay, there's something's coming in July. Like, guys, just prepare for that. So this time around, September, there's no press conference. Everybody thought it was kind of October was the designated timeline. So that meeting something was gonna happen. So it was a surprise, but not a shock. So they basically put the timeline a bit ahead of schedule. They received some criticism from economists for doing that because it cost, like, the probability was only 50-50. So meaning that there were still people who thought it was later in the year. But what it speaks to is sort of the confidence that the central bank has in the economy. So the GDP, so overshooting, everything sort of going their way. Oh, and this is in an oil price scenario where things are not that great. So we're still in that range, like $45 to $50 range, which is not great for the Canadian economy. So last time that the loonie was at parity, we were talking about $100 barrels of oil.
Give us some Forex trades that you're targeting right now, Forex pairs.
So I think right now the thing everybody's looking at, and as always, is the dollar. So the dollar has been very mixed going into this weekend, just because it was the sort of hurricane impact. We've got geopolitical. So it's always, especially now, it's a bit hard to just whenever looking at the market, investors need to realize that it's going to be very volatile. And we've seen sort of the weakness of the dollar be more on the geopolitical side rather than the macroeconomic or even the economics. So we've seen that the GDP in the US is strong, but because of sort of the Trump administration sort of a deadlock in some areas, just pushing policy through, that has hurt definitely the dollar. So going forward, we have sort of a bit of a recovery for the dollar, just because, again, the economics are strong. And it seems that the Trump administration right now is putting the emphasis not on sort of immigration or other sort of more divisive topics, but now on the topic of tax reform, which everyone sort of is very interested that goes through, and they want to see the package. So that's getting some optimism. North Korea will still be in the periphery, but right now we're seeing sort of the dollar. So dollar trades as very interesting just because of the low levels that the currency hit, and now we see recovery ahead. So everything against the dollar would be something that I would be looking at, especially things that moved more than they should have. Like, for example, the Canadian dollar, we were ready for a retracement just because of the suddenness of the move and the strength of the move. So right now, there's not going to be a lot of Canadian data out this week. So that's an interesting trade.
And what catalysts are you watching over the next few weeks or a few months?
So in particular for this trade, it's NAFTA. It's all about NAFTA. We've gotten very little on actual progress from NAFTA talks. So there was the second round of talks was in Mexico City at the beginning of September, and now the third round will be in Canada in September 23rd and 24th for that weekend. So we'll see there if they've sort of pledged that they'll start moving on the big topics. So right now it remains things like trade dispute and labor. So that it will still be in the agenda. They're trying to get the easy wins out of the way in the first two rounds, and it seems to be very amicable still. So going into the third one, and the reason why that's important is because sort of the economies of Mexico and Canada and the U.S. are sort of now so linked that just taking out NAFTA, it would be sort of catastrophic in the short term. It might be a good idea in the long term, but we know that the effect, it's something very similar to what's happening right now in Brexit in Britain. Like, it's something that's so ingrained in the economy that it's going to be really hard to pull it out without having a second option. So NAFTA is again in the periphery going into the end of September. So that's things will heat up. The Trump administration is sort of has two very interesting sort of talking points. So it depends on who's doing the talking, and that changes the rhetoric. So if Trump is communicating, he's been definitely the bad cop in this scenario. So he's very threatening to walk out. But the trade representatives have been sort of very open, and they're in touch with American industries that benefit from NAFTA. So there's that back and forth. They're definitely playing that strategy. And right now it seems to be going well. But again, that could change at any moment.
All right, Alfonso, we got a lot of news today, so we got to let you go, unfortunately. But thank you so much for joining us this morning. Alfonso Esparza, Senior Market Analyst at OANDA.
Thank you.
All right, doing some digging, and I posted some stuff in the chat. Dennis was there too on ICPT. So they are scheduled to present today at the Morgan Stanley Healthcare Conference. The CEO is supposed to speak at 11:45. So my first thought is maybe something leaked ahead of that. But there's also this note from 3 days ago that they had a death in one of their trials. So I don't know what's happening.
Yeah, so there is a note here. We just posted it in the chat. And I'm not sure if this was an Intercept note and said, "Dear healthcare provider, subject liver injury, liver decompensation, liver failure, and death have been reported in primary biliary cholangitis (PBC) patients with moderate or severe hepatic impairment." I don't know what any of that means. Was dosed more frequently than recommended. I'm not sure if this just came public now. It's dated 3 days ago, but that's what people are saying on Twitter now. That's what's circulating. I've looked multiple sources, and I don't see a headline coming from the company, but this is actually circulating, this note here that is on Intercept. It's from the chief medical officer of Intercept Pharmaceuticals. So it looks like it just came out maybe now. And that's, even though it's dated 3 days ago, and when you hear death in trials, it's always they punish the stocks. So it would make sense that this is the note. But I'm not a confirmation that this is what exactly is moving the stock. It's just weird because it's from 3 days ago. It's dated, but I think it might have just came public now.
Or they might have pulled out of that conference that they're supposed to speak in. But anyways, it just hit $90.
Everybody's talking about this note. Yeah. They're talking about this doctor's letter. I think what's happened is the doctor's letter went to Intercept a couple days ago and probably just came out public now, even though it's dated from 3 days ago. So that's why it's getting punished. They have 19% here now. So that does appear to be the news.
Johan Smith, someone on Twitter, this is just on Twitter, saying ICPT is abandoning the entire trial. That's kind of way the stock is acting, but no confirmation of that yet. If they're speaking at a conference today, there's sure could be some commentary later on. So we'll keep an eye on that. The stock just hit $90, currently trading at 92.
Yeah, so crushed here in the pre-market. Intercept and SAGE both having rough days, which can weigh a little bit on the IBB. Let's just, do you have it in front of you what the weighting is on the IBB with SAGE? And I don't think I can go hunt it down if you don't have it. Spencer usually has it.
It's not significant, but I'll pull it up right now.
But
I'm pulling it up too.
Let's go to Apple. Let's talk about something.
Okay, let's talk Apple while we just find that information there for you. So I just say SAGE is 0.5% of the IBB. It's 1.2% of the XBI. And I just want to get the Intercept just before we change the subject.
Go ahead.
Intercept Pharmaceuticals, ICPT, is 1.56% of the XBI, only 0.5% of the IBB. So XBI, these two stocks almost 1.5%. Combined, these stocks are almost 3%. So I wouldn't be surprised, obviously, XBI takes a little bit more of a hit relative to IBB because there's a little more weighting in there today. So keep an eye. XBI is trading down pre-market, definitely to do with Intercept, and SAGE falls.
All right. Apple, bullish note out of Morgan Stanley ahead of the big Apple event. Spencer, you got any highlights from that?
Sure. And I said yesterday that their event today would mostly be around the iPhone, which it is. There are other products that they usually discuss around these events, but it's mostly around the iPhone. If this note is any indicator, however, they are much more excited about non-iPhone related items. So here's what we got this morning from Morgan Stanley. They're maintaining an overweight rating on Apple. Price target, they're raising it from $203 to $252 $53. So they raised it by $50, citing the overemphasized augmented reality offering. They expect Apple to be the anchor in which firms like Alibaba, Amazon, Google, and Tencent will benefit from as e-commerce increases and mobile app adoption takes place. So very excited about Apple's Apple as a service, which is what something that Gene has talked about before. Gene Munster on our show is Apple is more of a services company than a hardware company, and so that's a high. I think that is the highest price target on the street, $253.
I mean, the AR, that's, and you talk about AR and AI, that's where the growth is going. I mean, we're moving into this stuff, and they're saying Apple's going to be the leader in AR. We've had Gene on the show talking about it before. We're going to have Gene again here on Thursday, so he'll be able to talk about it a little bit more, than we can. But I mean, if they're going to be the leader, I still say, Apple's still one of the best companies out there, and that's why I own it in my investment portfolio. I continue to own it. I mean, there's obviously, it's ran a long ways, people say, and I'm the first to say that, back when this thing was, just in November when it was $100, or in September when it was $100. I mean, you look at it year over year, you're up 60%, but there's still a lot of value there. I mean, they got a lot of cash. They do have some debt too, but they have, some growth, and they can start figuring out this AR ahead of everybody else. That could drive the next growth cycle for them. We've been saying they need a new product. Well, they start figuring out AR, there'll be some products coming from that.
I mean, good price action over the last couple days here in Apple. I'm just going to give you your pre-market high, and then also just give you a couple other numbers. Your pre-market high is 163.48. Really, the numbers you need to pay attention to are the all-time closing high of 164.05, so only $1.20 away from that. You had a pair of closes, 164, but the all-time closing high, 164.05, and then the all-time high of 164.94. I mean, you have an event. You don't know what's going to be said. There'll be some price fluctuations in it, so I don't know how you want to play that, but big run up over the last 2 days, and that price target is very, very. I mean, much
$253. So what's the math? What is that? That's going to be way over $1 trillion market cap. Then at that, we've been saying what's going to be the first $1 trillion company. Morgan Stanley obviously saying they think it's going to be Apple. Apple's current market cap right now, which made $834 billion. So if you go up to 253. That's putting another 60% on there. Oh, no. Carry the two. What kind of math is that? 1.2, $1.3 trillion market cap?
That's yeah.
Have our first $1 trillion company is what Morgan Stanley is saying.
Wow.
AR driving it.
All right.
I'm sticking with it. I'm a buyer of pullbacks on Apple. I still like Apple.
All right, 164.94. That's your all-time high, all-time closing high, 164.05. And I'm sure you'll see some good movement today, up $1.25. I'd like to see it unchanged here if I was trying to attempt along at 161.50. But there's going to be good movement in it today, especially during that event. I believe it's 1 p.m. Eastern Standard Time. Look for your Benzinga Pro for updates during the event.
Lots of other stocks here to talk about. You want to do some ratings changes? Spencer, what'd you see? Highlights ratings.
I haven't actually checked in a while, in like an hour now. So let me pull my ratings.
There's been a few.
Give us some highlights. Okay, I'll give you some highlights here from this morning. As far as upgrade goes, we have SocGen upgrading Citigroup and Credit Suisse this morning. We have Piper Jaffray upgrading Comerica. An upgrade from Pivotal Research to Kroger, an upgrade to Alcoa from Deutsche Bank. Those are the big ones that I'm seeing in upgrades. And then as far as downgrades go, Nucor, NUE, and Steel Dynamics downgraded at Morgan Stanley. What else we got? Advanced Auto Parts downgraded at Citigroup, and PDS and TTI downgraded at JP Morgan.
AAP downgrade to sell at Citigroup. I want to talk about this one there because this is selling low if you've ever, chasing price or whatever you want to call it. I mean, Advanced Auto Parts back in June was $130. Go back a little bit further than that. Just go to the beginning of the year. Beginning of the year, stock started the year around $175, 94 now. Now they want you to sell it. They're putting a price target at $82. It was nice to hear from them 6 months ago when the stock obviously was a lot higher price than it currently is. That being said, it's going to influence the stock price. People don't like hearing that. It's already got bad sentiment or negative sentiment towards the stock. You get another analyst pounding the table to sell the stock and put an $82 price target. I'd imagine AAP goes down significantly today. It is offered in the pre-market right now at 93.24. Nobody is lifting that offer. It's telling you it wants to go lower than 93 probably. I'd imagine this trades maybe in the 92, maybe even the 91 handle today on this note from Citi.
Looking at the just the action over the last couple days, 82.21. That was your low of the move. And then look how it tried to get into triple digits, but turned away. 18-point move. So take that, half of that, 9. So that will take you into the $91 area. So I also see a low at 90. So potential bids there between 90 and 91. I mean, what you said, late to the party here on the downgrade, but no reason to go out and throw the stock into your portfolio. I think I'd rather see this.
Still going down. Still trying to figure it out. I mean, if you got to that low, the capitulation low back at 82.21, sometimes what happens is you see the capitulation low and then you see a stock, bounce up, and sometimes for a long period of time. A lot of times, though, there is an eventual retest of that low. That's a long ways down. But that's sometimes, the time to strike, because then you have a definable out. You're trying to say that, is going to potentially make a double bottom, is going to hold. So, that's, from a technical standpoint. And the one thing is, a lot of people, and on this show too, we talk a lot about technicals. Charts are fun to talk about. Charts, work in a lot of cases, when there's no news, that's all you've got to look at is a chart. But, what I will say is, and we often say this on the show, is technicals always take a backseat to fundamental information. I don't care what the chart looks like. If a company comes out like Intercept Pharmaceuticals this morning and, warns that their drug, killed some people, it's going down. It's going down hard. It doesn't matter if it's the best looking chart in the world. So fundamental information always trumps technicals, always. So, it's a tool in your toolbox. Use charts, use technicals. If you're a purely intraday trader, you can kind of get away with the technicals because there's not a lot of news usually breaking during the day. But once you start going overnight, you got to also be watching your news. You've got to also be watching your headlines. You've got to also be watching other things. I use charts, charts. It's one tool in my toolbox. And I'll tell you, I have 5 screens. 5 separate screens. One's got my Benzinga Pro and my news, one's got, my scanners, another's got scanners, another's got trading software. Ask me how many charts I have up. So, and you could say, like we talk a lot about, we like the charts and we look at them. But Joel, ask me how many charts on 5 separate screens. That's a lot of screen room. Ask me how many charts I have up.
Dennis, how many charts do you have up?
1. One chart. And you know what it is? It's the daily. Because that gives me an idea of what it's been doing. And I switch that chart. I go to an intraday and I, switch it back and forth. But you can see, I'm only using it as one tool in my toolbox. I'm always more of an order flow trader. I like to look at order flow. I like to look at, I like to look at, my scanners. That's where I really put a lot of my weight, is always on my scanners, because a lot of times, these, the scanners give me the ideas. And then I might take a look at the chart. But you need to be more than just a one-trick pony, in my opinion. There's some really good technical traders out there, and they stick to it. But once you start getting away from intraday trading, which, and a lot of our listeners aren't just intraday traders, I think you got to, use other information as well.
I just want real quick before we bring Nick on, this Kroger upgrade. This is an interesting chart to me, Dennis. You had a 2046 low. That was after the double whammy of bad earnings and Amazon taking over Whole Foods. You had a little bit of a recovery, got hit on earnings again, but someone is making a stand here. 2046 was the former low of the move. You went to 2041 and now getting a bounce, getting a little bit of an upgrade. At least here you have a reference point, right? You know where the buyers are. So lower risk trade here. I'm looking at this Kroger's. It's just out of favor, but maybe we'd be covering the short, but definitely a great area at the 2041 low. Right.
I don't like Kroger here. You know why? Because it did not make a new low on the move. Did 2046, 2041 by a nickel.
Yep.
I'll call that a double bottom. So you have a definable out here. And it did not get down there yesterday either, 2073. So I don't mind your Kroger, the Kroger here as a setup. If it takes out that low, takes out $20, round it down to $20, give yourself a little bit of room, I'm out. But at least you know where your out is. I mean, that's not a bad setup. You're definitely, trying to pick the bottom here, but you're not buying it as it's falling. It's had a day of consolidation here now, and there's a definable out from the day before. Cuts through 20, I'm out. So risk return is there on Kroger. If it pulls back the lower 21s, risk yourself $1. See if you got some upside. I don't mind that setup.
And also, I mean, you did have some recovery in some of these other stocks. Costco still slow to recover from the big move. Target. I mean, a lot of these things have recovered. Kroger hasn't as much. All right, 8:35 on Tuesdays, and we are minute late for Nick Chahine. So I hope he's still.
Yes, you are.
Sorry, Nick. How you doing today?
Doing good. How about you?
We're doing good here. Markets, let's just go general market. You always say too hot to short.
We get it wrong. Me and Joe just say
I'm going to write it down. Go ahead, Nick. Go ahead.
That's why I shorten it. THA. It's too high to chase, too hot to short.
Okay. All right. So what are we shorting today, Nick?
What are we short?
I'm joking.
I'm
joking with you.
You need a reason to short something. That's the point. Because
Go ahead.
Yeah, because the proverbial they are buying dips that are worth not shorting. For example, unless you have a specific story like the Equifax debacle, for example, that's a perfect example, jumps into mind. There is a reason to short. Otherwise, the default is meander and trickle up, because everything, we've had every headline to be had in the last 2 weeks. I mean, it was like a death by 1,000 headlines almost, but it's like more 1,000 cuts and nagging, but they're major. I mean, we had nuclear talks, we've had major hurricanes that we didn't have, a complement of hurricanes and all kinds of stuff, and we shrugged all of it off. And so there was no reason to short, and you just trade the range.
All right. Just real quick, we talked about Apple, the big event coming up, but I have a feeling you might have played it ahead of the event, and then now you're maybe cashing out to see what actually happens. But wild price target, 253 coming out from Morgan Stanley today. Any comments on Apple? It's a $1.15 away from its all-time high.
Well, the consensus is overwhelmingly that it's going to fall. So that tells me, I don't like it when everybody's on the same size of the bus. And also Gene Munster a couple of days ago came out and said that, this guy, I don't think I've ever heard him say a negative thing about Apple or any other stock. And he said he expected up to like a 10% drop. And the stock didn't move a lot on that. I thought it would be like, a bigger reaction to it. So fundamentally, it's not expensive. And it's a big boulder that prints money. They sell out of everything they make. All I have to say is expectations are set so high over the announcement today that let's see what they deliver. They better deliver and a new iPhone 10 and a watch, because I think that's what the markets have priced in. As far as playing it, I did it indirectly. I shorted the NASDAQ earlier and booked it. So I always say I book early these days because I don't want to overstay my welcome. I don't mind leaving money on the table.
Nick, are you following the whole augmented reality, the AR stuff? I mean, this gets a little bit over my head sometimes, but this is this Morgan Stanley note from this morning. They are pumping like that Apple's a leader in AR, and this is what's going to drive the next growth cycle. Do you follow any of this AR stuff?
I feel offended when people that are not engineers start talking about it, because I am an engineer and I'm always excited about technology, and I was on the forefront of a lot of it. And yes, of course, all of this stuff is going to be in the future, but I don't necessarily will put my hat in the Apple. But, so far, Tim Cook has showed me nothing exciting. I am disappointed with him. I think Apple would have done just as well without a CEO. And it just because of the boulder they left, and execution has been less than par. They've never had a release that had, okay, we've got all the iPhones we want, line up all you want, we'll sell them all to you. It's always been, oh my gosh, we're going to trickle. The earbud things is probably the only new technology they presented. And I've seen one on the street, and I live in a pretty good area, and they're not there. So here you are, you deliver something exciting, and it's not ubiquitous anymore, and I don't know why not. So he has to prove to me that he is the one to bring new technology, or at least enhanced technology, which is what they do. They take something that somebody else invented and they make it cool and sexy, and before you know it, everybody's got one. And they have to prove that to me. So yes, I'm on board with AR and whatever you want to call it, but not necessarily from Apple.
Well, who would it be necessarily from? Do you have another one on your radar? Like some people say Google.
Google is right there, but I think it needs bolder people. So I'm going to say Amazon, because they seem to come to market first and out of the blue with something that changes everybody's lives all the time, whether changes the businesses for the worse and the people for the better. So I think it needs somebody a little bolder than Tim Cook. Google could be it, but it's not a sure thing, because now it's muddled with they don't tell us what they're kind of doing out there. They may be wrapped up in the car thing. It's all going to come together in surprising ways. So it's going to be little bits and pieces. I don't think one company is going to take it and say, I did AR. It's going to be little bits and pieces from here and there. So what is, you have to first define it, augmented reality. What is it? Is it a confluence of seeing things and then printing them, or showing almost like a hologram in front of you? I mean, what is it?
Well, exactly. I mean,
I saw holograms when I was 22. I was at a company, I forget the name of the company. They had a table and they had people fighting on the table in a hologram. I was like, wait, what? Where did that technology go? And that was like eons ago, maybe like last month. No,
because it always got squashed, but now they can't squash it anymore. You get the big companies that come in and buy the little technology and squash the ideas. But with social media, it's difficult to squash ideas now. So hopefully we're going to see some more innovation there. I've always said the same thing. Like you look at holograms. I always wonder, like, when am I going to see, like, on my TV, like I watch a lot of sports. I love my hockey, and obviously a lot of people like their football. I watch my Tigers too, although not this year. But, one day I envision, looking at my coffee table and feeling like a whole stadium effect where you see, a hologram of the whole game going on from your coffee table, where you can see everything lined up like you're at the game, like I'm sitting at the game, but I'm sitting on my couch and the game is being played as a hologram right in front of me. I kind of envision that happening, but who's going to make that happen?
I literally saw that, 22, 25 years ago, and it just went away. Plus, it always seems to come to whatever people see on TV, and then there's always a geek watching something on TV. Geek over here, by the way, and then they end up engineers, and then they invent something that looks like what they saw on TV. And it's no surprise that the Motorola flip phone, that kind of like, whoa, you remember that? It's like the communicator at Star Trek. Was Jules Verne's a seer of future things to come, or did he drive the technology to go down? And so you never know what drives what. So yeah, the hologram thing. I mean, I used to watch Star Trek, and the holodeck was like something. Where can I get into one of those? If you're a Trekkie, you know what that is, and that should come first. But I can tell you one thing: why am I still using keys? I'd be more excited about having keyless life. Where I just either speak to something or put my finger on something, open the frickin' door for me, so I don't have a key. I need to have or my car keys. Simple things are more exciting than this augmented reality and the Internet of Things that people throw out there. Those terms bother me for some reason. I can't tell you why exactly, but they just bother me. There's so many other little things that could make our lives better in general.
Nick, you mentioned Apple, just borrowing features from other companies, or who does that more than Facebook, though? Because I was reading yesterday that Facebook is now testing a Tinder-like feature in New Zealand and Toronto. They bought Instagram, they basically cannibalized Snapchat, they got the newsfeed idea from Twitter and the hashtag idea from Twitter. So Facebook, they're the kings as far as I'm concerned of borrowing from other people and putting it on their platform.
Yeah, well, they can do that, but they're not as old as Apple in doing so. So Facebook is pretty exciting. And by the way, their stock held up great during this quote correction. CNBC was talking of a correction. We were like less than 1.5% off the all-time high. And every day, the headline changes. If we have a red day, it's the run over. We have a green day. Are we off to new highs? Like, how about you pick a thesis and trade it instead of listening to, somebody else opine about something that they may or may not know. So yeah, I'm on board with Facebook doing it. I mean, they already have the mask, don't they? The virtual reality thing. So they have the money. I don't know, did their leader check out? I hear he's on parental sabbatical. So that worries me a little bit about but maybe on rails, he maybe have a deep bench. I'm not sure. So I'm all for him having a personal life, but you don't hear that of Bezos. He's there. He's throwing his ideas and he's executing them. He must have an unbelievable plan. So maybe a collaboration. Maybe they need all the bits and pieces to come together. Maybe to form a consortium of sorts. I don't know. But there's a whole bunch of exciting things. I don't want to put a label on it. One label, augmented reality, buy Apple because of it. Buy the NASDAQ because of it. That'd probably be a safer bet.
Dennis and I were discussing a potential setup in the IBB here, just kind of bunching up at the highs of the move. I just want to see if you had a chart or you had any comments here. It looks like you could go either way. And some bad news on a couple biotechs this morning, Nick, but give us your thoughts on the IBB.
Technically, definitely showing promise. Unfortunately, it's so tight that it doesn't tell you from the chart itself that it's going to be up or down. So if I'm long it, I probably want to trim a little bit or hedge my bet somehow. But it is definitely technically exciting. And there are companies within it that if you play each company, you'd know that there are situations like that in it. Yeah, I did see somebody dropping big time this morning. I didn't read why. I was a little busy, but that's an exciting sector. And usually, if I have profits, I book them just in case, just because from reverting to the mean perspective, the red-blue line on the chart I gave you is just a mathematical mean, or a regression line. So logic says it could revert down a little bit without any major change in the overall direction from the bottom left to the upper right, as they say.
All right, couple stocks in the chat here from DC. If you just want to pull them up. SRE, Sempra Energy, that stock's at an all-time high. Not sure what you could say about that. Maybe just keep an eye on the old-time closing high. I think that was the high tick from yesterday, 120.06, 120.10. I mean, here is utility company. Utility up at all-time highs. Any comments on this one, Nick?
Give me the ticker again.
SRE.
Okay, SRE, is it moving pre-market? So I don't open.
No, it's not doing much.
Yeah. So if I'm long it, I have no reason to close it because it looks technically frisky. It's setting higher lows in the last 2-3 candles, and it's exceeded the recent high I see on the chart. I don't know if it's at an all-time high or not. So definitely, there's no reason to short it at this point. And if I like to trim when I have profits, but it all depends on when somebody entered it. But there's definitely room from what I see. I don't know the fundamentals, so it's you have to do the homework there. But technically, I have no reason to short it at all.
We've been on the
jumping
line.
over here just to a couple other stocks that I want to talk about here, Nick, and that have on my radar. One stock's getting upgraded, and we don't ask you a lot about these ones here, is Alcoa AA. It's getting upgraded to buy here this morning at Deutsche Bank. This stock has been a monster mover. Just quietly in the last 3 months has run from when the summer when it was $30. $44 here now. It's up 50% here in 2.5 months. What are your thoughts here on AA?
I definitely don't want to chase it long from here. A 50% move, like you said, is pretty impressive, but I don't know the fundamentals of it, especially after what they did. But this was a giant cup and handle at the 30-40 level. That was the neckline area. And so it's somewhat of a measured move. Technically it may have a little bit higher, but I think if you're not on board, you miss the move and you just wait for a better entry point.
Airlines, we've got Spinner asking about the airlines. These things got absolutely murdered last week when Hurricane Irma was going to destroy the whole world. Well, they have been in rally mode for a couple days here now. LUV has went from 50 up to 53.60. SAVE has went from $30 up to 35. American Airlines, AAL, had a nice day yesterday, rallying a couple of dollars. And Delta, DAL, broke out actually to the 48 resistance yesterday as well. Thoughts on the airlines as they appear to be bouncing back?
I sold puts, so I'm long.
Nice.
I'm long them, and on the dip, I sold a little too early, but I added. So it's fundamentally they are cheap. I hated airlines for the longest time, but the math this time to hate them doesn't really work out unless they again embarrass us somehow with a different video of sorts, which is entirely possible. So I think that they have some upside if the market in general holds up. So because the math works by that, I mean the PEs, valuations, the incomes, and the fact that everybody's flying regardless of how difficult it is and how expensive it is. So I like them from a fundamental perspective, and the fact that they've corrected so much, I like that. The transports in general, if they do trade with the transports, are also exciting. So I would check that for sure, because technically it looks like here's the IYT. This is a chart that if you were on board long, you definitely want to ride it out to see how high it could recover from a technical perspective.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins our show every Tuesday to give us a fundamental and technical outlook on the market. Thanks a lot, Nick. We'll talk to you again next Tuesday.
Can't wait.
All right, S&P futures are showing a little weakness here, Dennis. We hit a pre-market high of 24.91 basis the December contract. Now we're up only 250 here. Nothing to get alarmed at yet. Did we get any sell imbalances or something? That
Not really.
No,
Mixed. GE always has a sell imbalance, so it's got 164,000 to sell. It just has that eternal seller that's there forever. That's been right the whole time too, because they've been selling for I feel like a year now. It's like GE almost every morning has a sell imbalance. The Alibaba buy imbalance is still there too, 94,000 shares to buy. Baba coming close and getting up there towards its all-time high again too. That's one that I still like, Alibaba. Bank of America, 67,000 to sell. Bristol Myers, 47,000 to sell. Pfizer, 92,000 to sell. Those are some sells. Then there's AT&T, 123,000 to buy. That's going the other way. So it's kind of mixed is what I'm saying. I don't really see everything just jumping out and saying, whoa, I see a lot of sell imbalance driving this. So I don't think the imbalance data is the driver for why we pulled back here a little bit. So I think we're just kind of bouncing around a little bit, trying to figure out where we want to go after yesterday's big out move.
All right, let's talk about Citigroup from yesterday. Came out
unbelievable.
Yep, came out during the show. Lower revenue guidance, correct, and didn't even take out the 2-day low. We were looking at the $66 level, went down just to 66 and change, and then turned around on a dime. So, man, you get a stock reacting like that to supposed bad news. Impressive move in Citigroup yesterday.
Yeah, it got hit live on the show. We were calling it as it got hit in the pre-market there. And, and then buyers, buy the dippers, just come in there. And we knew the banks were very strong before that, those comments from the CEO there or from the company there yesterday. The banks were trading very strong. And it was overall just, that damage from, Irma wasn't as quite as bad as, to be expected, even though it looks really bad on TV with all the floods. The market was interpreting that it wasn't as bad as expected. And all your banks and all your financial companies had enormous days yesterday. I mean, those reinsurers yesterday, Joel, those were crazy. I sold my AHL yesterday because it got silly. Yeah, they got silly. I mean, you're talking like these stocks like RE, for instance, and I got short that RE open too at 245. I mean, these things opened up, and got 3/4 of the losses back from last week. Well, now it's getting done, overdone. It was overdone when they dumped them 25% on the fears that Irma was going to really cost them a lot of money. Now that it appears not costing them as much, they want to rally them almost all the way back. Well, the way I look at it is you're still going to have costs from Harvey coming. Travelers actually said overnight, TRV, that their costs are going to be significant here. Stock is trading down the pre-market on that news because they actually suspended buybacks too with those costs. And Irma's still going to cost them some money. There's still Jose kicking around out there. We don't know where Jose is going. And we're still in hurricane season. So these things aren't out of the woods by any means. So that's why I decided on, AHL. It was a stock I'd had for a long time. It got hit hard. I didn't think it could get hit that hard on one hurricane. So it was an eye-opener for me. And it bounced almost, all the way back. It bounced back $8 from the low. I'm talking a 35, 20% move from the low in 2 days. I'm done, and I think, going forward, it left a bad taste in my mouth. And I don't think I would put any of these reinsurance stocks in my portfolio anymore, just because I can see what they happen if one bad storm comes in.
Did you get to RE? Because I see the opening print at 242.17.
245. It opened to no, because you know what? It had delayed opening. So if you're on a consolidated tape, and we can do a lot of education for everyone here. If you're running consolidated quotes, and most of you are, 99% of the retail brokers out there are going to be running consolidated quotes. You will see a media 930.00. They'll say where it opens. Well, that's where it trades on any exchange. They'll cite that opening price. I always look to the primary market, and typically a lot of your actual data that's coming from your closes, those are going to be your primary market close. So you're actually getting that information like a Yahoo Finance can be a close. It's going to be from the primary market. So I wait for the primary market open. The primary market open on RE was delayed because there was so many buyers. So the designated market maker on the floor is trying to put the opening quote together with the help from his automation. And it took a little bit longer than expected. It didn't open until almost 5 minutes after the open, 2:35. If you see at that time, you'll see a huge block print. And that was the opening print. And that's where I got filled in my OPG order, which was sent to the primary market short at 2:45. Don't ask me where I cover because I have the scalper blood and I cover way too soon.
If you covered before 240,
don't tell
you
cock about
before
my trading, Joel.
Okay.
But anyways, I cover way too soon. We know, scalper blood in me, I cover way too soon. Multiple reasons for that, because I was looking, and you second guess yourself because the insurance stocks were up so much. Anyways, so it wasn't a great trade for me. I made money on the trade. I should have made a lot of money on the trade. So very disappointed. Actually, and this is what, it's the one thing I can say too, is a lot of times you have, instances where, traders, I'll say a lot of times some of my best trades I lose money on, and some of my worst trades I make money on. This was one of my worst trades because it was awesome to get in it, great price to get in it, but I got out way too soon and I left 10 points basically on the table, because the stock fell 13 points from that open. I even left more than that on the table because it closed 232. So, it was a trade I second guessed myself on after I got it. A lot of times I don't like getting them when they're that delayed, because a lot of other traders are already looking at it, and then I think it's going to get crowded. So I second guessed myself too much. I shouldn't have. I should have stuck with it, and if it would have taken out, the opening bar, but I never took any heat on it. So I should have stuck with it, and I didn't. But, we're always learning, and we continue to learn. That's what this markets are all about. I've been in the markets for 18 years trading, probably made over 1 million physical trades in my, trading career, maybe even more than that. And you're always learning. You're constantly learning because you've got to adjust to new market environments. You've got to adjust to new things. And if you're not constantly learning and adapting and adjusting, you're going to, be a dinosaur, and you're going to probably put yourself out of business. So you always got to be learning new things. And I learned yesterday that, again, a hard lesson, but when you get that opening price, and I talk about it all the time, something you taught me back in 1999, Joel, that a lot of times the stock opens at or near its high or low of the day. RE basically opened at its high of the day. And I had the thing short. So, that's what you want. That's the whole idea behind the opening trades, is to get those few that you actually get the high or the low of the day, and those become huge winners for you. And I cut it too quick, and I didn't get the winner that I should have.
Yeah, you never go broke taking a profit, right?
I do, though. Yeah, I took it too soon. So,
okay,
people will say that.
Up.
I will tell you that is the worst saying on the street. Okay, we're going on it. I know it's only a minute left in the show. We're going to go over time, because that is one of the worst sayings on the street. I see that saying all the time. Kramer says it. Everybody says it. I will tell you that is not a good saying. You know why? Because if you're always taking your profits, too quick, you're one of those traders often that probably, a lot of traders will have loss aversion. They don't want to take any losses, and they take their profits too quick. And what ends up happening is they end up, cutting their winners short, and they end up holding their losers too long. And they do go broke, and they do blow out those accounts with those strategies there. You've got to maximize your winners as well. It's not about just, every time I'm up a dime in a stock to take the profits, I can't go wrong doing that. If you are constantly selling your winners for 10 cents all the time and holding on to your losers for a buck or two, you will go broke for taking those profits, because those winners, even if you said, hypothetically speaking, that it's a 50-50 game, and it's not, because the game's rigged to a certain extent. But if it's a 50-50 game where the stock XYZ is trading at 50, it can go up or it can go down. And we got to not consider commissions and everything else, because that's why the house's edge, where they're it's not a 50-50 game when you start considering all the expenses that are incurred. But if it's a pure 50-50 game, stock XYZ can go, it's at 50, it can go up or it can go down. Then you've got that situation. Now I went on such a tangent, I forget where I was going with this. But where was I going with that, Joel? I lost my train of thought. Live on the show.
Listen, don't take profits too early. You'll go broke.
That's what it is.
You will go broke taking profits. Is that better, Dennis?
So
you
if you're
will
always
go broke taking profits.
No. It's not the same. So you don't go broke taking profits, but you do, because if you, let's say in that situation, you're always cutting your winner, and you're taking that 20-cent gain. So you're selling at 50-20. Well, if it's 50-50 and you're holding on to the losers all the time, eventually you're going to end up with a portfolio of losers. And eventually that portfolio of losers, it's going to take your account down. And eventually that account down could go actually take you under. So I say you've got to maximize your winners, minimize your losers, and you do go broke taking profits. I'm probably one of the only people that'll say that, but you can go broke taking a profit in this game.
Too soon. I'll say that. You could go broke taking your profits too soon. All right.
And if you've got as long as you have the risk reward setups and you have your setups ahead of time, and that's why I always say on the show, incur the 2-to-1 or 3-to-1 risk reward measures. Then you could be wrong. If you're doing 2-to-1, you'd be wrong for 2 times every time you're right and still be breaking even. If the game is, there's no fees, we're saying net of fees. So, but if you're always taking those profits too quick, you can go broke taking a profit. So careful taking your profits.
All right. There was a couple stocks here that I just want to cover in the chat. They were being very patient. One we talk about all the time, Western Digital is having some movement in the pre-market. I think for this one, which I've been holding on to a long time, still kind of using that $80 bogey on the downside here if it gets a sustained closes under that. But really, man, the sellers are just congregating. First, they were up at the 95. Now they brought themselves down to the 90 area. So I think the longer it takes the stock to get back over 90 with a couple closes, the more inclined I would be to let it go. Dennis,
that's what you stuck with, and that's an awesome trade for you. I mean, how often do you hold something for 50 points, Joel?
Against me, all the time. No, I'm joking.
I've been trading this Western Digital here after hours. I traded it last night. I actually shorted it when it was up in the 90s. And, I had a nice little trade because I covered 88. It's on the Toshiba. So this is all off this news with Toshiba. Are they going to be, Toshiba was saying, last night that they're in talks, to sell their chips or whatever. There's some, deal that, they need the chips and they don't know where they're buying them from, basically. Western Digital was in the lead. But then CNBC broke this morning that this other company was maybe going to be the one, and talks have broken off with Western Digital. So watch your headlines. It's all moving on headlines with this potential deal. I believe it's with Toshiba.
Dennis, can you get one more rant in here? Someone wants to know why Intuit is constantly climbing here. And I know you're going to say you don't need a reason to go up. It's going up because there's more buyers and sellers. But for this one, you want to see 143.81. That's the all-time high. It's been a nice climb. I really don't see any messages on this one. But I should probably check the pre-market chart. No, just keeping an eye on that all-time high. All right, we've already gone almost 4 minutes over, Dennis. I know you want to get ready for the open here. Spencer, you want to wrap things up and preview tomorrow's show?
Sure, just keeping an eye on some catalysts today. So we do have the Delivering Alpha conference on CNBC. It's been going on all morning. It'll go the rest of the day. A couple talks to keep an eye on. We have Jim Chano speaking later today. We have Jamie Dimon speaking today. Stephen Schwarzman of the Blackstone Group is speaking today. Leon Cooperman is speaking in about a half hour. So some names to keep an eye on if you're watching that. We do have, again, the Morgan Stanley Healthcare and the Barclays Financial Services Conference is continuing today. And the Deutsche Bank Technology Conference starts today as well. Okay, that is our show for the day. Hope you had a bit of a marathon day, 5 minutes over, but that is quite all right. Hope you enjoyed the show. Hope you enjoyed all of our discussions. You can catch the whole thing again on our podcast, SoundCloud, iTunes, and Stitcher. Just search for Pre-Market Prep on any of those platforms, or just watch the show as it aired live on youtube.com/Benzinga TV. That's Benzinga's YouTube channel. Don't forget to like and subscribe to that to find out when we go live every day. Okay, have a good rest of your day, folks. We'll be back with you on Wednesday, and have a good day. Good luck out there.